The price of gold has done a very good run so far in 2024, but junior miners are still lagging behind. Now it's a very good time to do your due diligence, find very good and undervalued companies and make some investment decisions. And one of those companies who might be a possible investment decision is Kalamazoo Resources. And today with me is the CEO of the company, Luke Mortimer. Luke, first of all, thank you very much for your time. It's very good to see you here. We're going towards Christmas and you're still having time for us. That's great.
No, thank you. Always got time for our investors in Europe.
Very good. So, Luke, let's talk a little bit more about the overall picture in your story, right? I mean, you have the Ashburton gold project and you kind of have a, let's say, deal on the table, which is not completely done right now. Your company is worth around 15 million Australian dollars. You have an, let's say, deal on the table worth $30 million from De Grey Mining. They are currently doing their due diligence on your project and they might want to take out your project for, as I already said, $30 million. But now De Grey Mining got a takeover bid from Northern Star for 5 billion Australian dollars. What are your thoughts on this deal, and will it help Kalamazoo Resources to sell the Ashburton project?
Yes, well, ironically, we acquired the Ashburton project from Northern Star Resources back in 2020. But at the time, we did so on a deferred consideration basis, whereby we would pay Northern Star, milestone payments and royalties, etc., upon production. And in the last, 4 years, we've done some drilling, we've done some resource update work, and we've also done some metallurgical testing. Now, for context, in 2013, Northern Star had actually shelved this project. At the time, the gold price was $1,300 an ounce. It's now double that now. And at the time, there was no major deposit or POX plant that we could treat refractory style gold ore in the region. So at the time, that's pretty much, I think, the main factors that why that project was shelved. And then Northern Star went on to bigger and better things. Since then, obviously, we've done a resource update. The Hemi discovery has been made. De Grey have come along the scene, and now they're building this very large POX plant in the region. And they have plans beyond their 12-year mine life, their current 12-year mine life that they've published, to get more regional deposits treated at that POX plant. So De Grey came to us with a deal back in February, whereby they paid $3 million non-refundable, and then there's another $30 million to be paid over 2 tranches. And then during this year, during the option period of this agreement, they've done something like over 2,000 odd metres of very large diameter metallurgical drill hole testing. And they've done other sort of works on historical pulps and things like this, geotechnical studies, all to the point of now getting to that point of making a decision of whether to go through with that sale. Now, they've just extended that option period out to August because I need more time to take into account the Northern Star takeover, but also to complete those metallurgical test studies. So in terms of where we now sit with Northern Star, we think it's a positive because Northern Star are buying De Grey for $5 billion. They're a major producer. There's no way that they would not now develop the Hemi project and build that POX plant. So it guarantees that POX plant is going to be built. And I think that's de-risked a lot of the Ashburton sale process because, it did hinge on Hemi going ahead and that POX plant being built. Now, the Northern Star coming in, that pretty much guarantees that mine will be developed and that POX plant will be built. So I think that's a key message, is that now gives us some optionality with our project. And I guess secondly is that another point to consider is that, the gold price when we signed the deal with De Grey back in February was, I believe, on the day, $2,025 dollars an ounce. It's now pushing nearly $2,700 US an ounce. So effectively, since then, it's another more than $1,000, I believe, Australian dollars per ounce. So if you look at the Mount Olympus resource model on its pit shell of 530,000 ounces, it's equivalent to something like another $500 million Australian dollars in value. that this deposit's actually gone up since we signed the deal based on the increasing gold price. So with increasing gold price, the POX plant more or less going to be built, in our opinion. And then, there's also the fact that our grade is double that of the Hemi deposits. So it produces a higher grade concentrate. It has more sulfur, which could be handy for that POX plant process. So there's a lot of things a lot of boxes that are being ticked. And so to be honest, we're quite happy with the Northern Star takeover bid for De Grey. And I see it really as more just positives for the project.
Perfect. That sounds really good. Thank you very much for sharing your thoughts with us, Luke. So as you already said, the gold price has increased since you done the deal in February this year. I think there is no real reason to believe that the gold price will go down again. I think we all can agree that there is enough, let's say, indicators for the gold price to go above 3,000 US, which would even mean more Australian dollars here. So it's still a very attractive target for Northern Star in the future. But let's say they don't make the deal with you. Okay, let's talk a little bit more about the worst case scenario. If they don't make the deal, you will still have a project with more than 1 million ounces and a higher gold price. That sounds quite good. Like even the worst case sounds good. Let's talk a little bit more about this option.
Well, I mean, there are options to treat our ore, which included not only just a POX plant scenario, but you could also just produce a gold in concentrate. And so there are a couple of different options how we could progress this project. But as we just discussed, in less than a year, the gold price has increased another $1,000 Australian per ounce. This project has never been more valuable. And, before we signed the deal with De Grey, the option agreement with De Grey, they weren't the only party that we had spoken to about the project. So it's now increased in value. We have options. And to be honest, we're not really concerned. We would prefer to do the deal and see that through. But worst case scenario, it's really not going to be of great concern to us. We believe that we have options. And it's as I said, it's as valuable now as it has ever been.
Right. And if we talk about the value of the project, we should also have a look on your latest news release, right? You released the drilling results that De Grey did in their due diligence phase. They did diamond drilling, I believe. And we're talking about some very serious numbers here. Can you give us a little bit of a rundown?
Yeah, I mean, they are really impressive drill intercepts. So these are from the 10-hole metallurgical drill testing program that De Grey had completed during the year. This is primarily to collect metallurgical samples that will be tested for all sorts of, geochemical and ore processing type studies that would allow it to be, evaluated in terms of its suitability for their POX plant. Now, no red flags have been raised to date. That test work's going ahead as planned. But at the same time, they also did the assay work on those holes. Now, to be fair, these holes are infill holes in the existing resource at Mount Olympus. Like I said, it's something like 530,000 ounces in a pit shell design. And what these numbers show are just impressive gold intercepts. And I'll just give you a few examples. 47 metres at 5.5 grams per tonne gold, 55.5 grams at 4.1 grams per tonne gold, 31.8 metres at 3.3 grams per tonne, and 15.3 metres at 6.5. That's just a sample of some of these intercepts. What that shows is the quality of this gold deposit. I mean, the resource model is robust. It's now been independently tested. These results are fantastic news. I mean, the overall resource has a value of 2.7 grams per tonne. These numbers just pretty much, support that and give us greater confidence that this project is robust. I mean, that resource figure is actually about 2/3 of that's in the higher confidence indicated category of a JORC resource. So we already had reasonable confidence in it. But for someone else to come in, drill these holes within the resource pit shell and come up with numbers like that just shows the quality of this project and the robustness of the resource. And I think it just proves that it's as viable as ever.
Perfect. That sounds really good. And I think it's fair to say that I believe there are many companies or, let's say, good investors that have since this news release, really Kalamazoo Resources on the top of their mind, if you like. I think it's a well-known story, and we are talking, and that's very important, about a project in Australia and not somewhere in Africa, for example. And we're talking about very high grade. So it's very interesting. It sounds very positive. Thank you very much for your update, Luke. Is there anything else in the end that you would like to say to your investors here in Europe?
Yeah, I think what differentiates Kalamazoo Resources from, say, other junior explorers is that we have a real asset backing to our valuation. We've got a track record of returning money to investors. We had the Snake Well sale, $7 million, after doing some bulk trial mining. We also sold some tenements in Victoria for $3.5 million. We did the successful Kali Metals IPO, where we returned value to shareholders through in-species distribution, as well as retaining 20% in Kali Metals, which is a very successful IPO. And then there's the Ashburton gold project deal. So to put it into context, our share price today, I think, was 8.8 cents per share. If you take the $30 million that would come from De Grey or Northern Star executing this agreement, that equates to something like 17 cents a share, just on the $30 million alone. That does not give any value to all our other projects in Victoria, as well as our Melina West project that we're currently drilling up in the Pilbara near Hemi. So it's great value. There's a significant arbitrage between the current share price today and our market cap today to what this $30 million deal would actually deliver to shareholders. So I guess what I'm trying to say is there's a real value proposition in Kalamazoo that is actually backed by real assets, a significant deal on the wings, 20% holding in Kali Metals. And, like all companies, we all complain that we should be valued a bit higher, but at least we can say that we've got some true asset backing behind our valuation. And I think that's important for investors to understand.
Very good, Luke. Thanks for outlining this. And as you already said, it's very important for investors to understand. Thank you very much for the update, for the interview, and Merry Christmas.
Merry Christmas to you and everyone over there. And thank you for your support.
Thank you.